Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, everyone. How you going? Thanks for joining us on the podcast today. It's all about investor stories at the moment. We're in a groove, a really good groove right now, and we sort of ebb and flow. And it's funny how things work out as COVID hit back in March and April. Pretty much every conversation I was having is around doom and gloom merchants telling us about how property is going to fall apart. So dominated a lot of our commentary on smartpropertyinvestment.com.au and also the Smart Property Investment Show podcast. And rightfully, that's what we should have been doing at that point in time. And it was our job to ensure to help people are making more informed investment decisions. So what do? You go to the sources being the data, the demographers, the commentators around what's going to be happening with property. And we drew down in our network of people and had some really good chats right across the nation, powered by Zoom. You know, I used to be pretty particular about making sure we did stuff in the studio, but we've embraced Zoom on a Smart Property Investment Show, so we're able to speak to people right across the nation now, which is cool. But as we sort of worked out that COVID-19, while it sucks, you know, life goes on. And we now know that South Australia is opening its borders up. Queensland is opening up its border. Victoria, who did first round pretty well, went into second rounds, are now indicating that there is a pathway out of lockdown. So all things are looking positive. And I think we've pretty much done now what's going to happen because of COVID and life after COVID now. And some really good numbers coming out recently that encourages me around the market and investing in property, that the dire numbers that we were hearing when COVID was at its peak, or sentiments towards it was at its peak, with 30 to 40% drop in real estate prices, isn't going to happen. Westpac Bank has come out recently saying, it was going to be 10, but now we just think it's about 5, and some other commentators coming out saying all is okay. So we've shifted back into gear, having investor stories. Today's going to be one of those, and it's a little bit different though. It's a bit of a mixed blend. Arjun Palliwell, you would have heard of him before. He's been on the podcast a couple of times, good friend of the Smart Property Investment Show. I've known him for years. I've asked him to come in, but whether or not she's going to enjoy this or not, I've asked him to bring in someone that he works with so we can have a true, deep conversation around what actually happens at the level of a buyer's agent supporting their customer, Lorna Wang. How you going, guys?
Hi,
You
Phil.
well?
Good, very good.
All cool?
Yeah.
You're looking real tech today, Arjun. You've got your black shirt and black puffer. Normally that's how I'd be dressing.
I'm embracing the Zoom culture, really.
Oh, yeah? Take a look at that. How's things treating you, mate? Wasn't that long ago we caught up, really. It was about a month or so ago, right? Maybe a little bit longer.
We've been very, I think, head deep into numbers these days. I mean, there's so much changing. And so I think that's where the regular catch-ups are coming in, and just so much changing. And, you know, we're digging up different types of research. It's been interesting. And I think it's been a time for us to actually look at what's happening across the globe and actually lean on research from other parts of the world too, just to see what are people doing in New Zealand and USA and how COVID's treating them. So it's been interesting.
So head of research at InvestorKit, and I'm sure everyone who's tuned in will be familiar with Arjun. Is it a good time to be a buyer's agent, mate?
Well, I mean, it's not easy with low stock. So we are...
So that is, there's not that many properties around to buy.
That's right.
Yeah.
There's not a lot. And so
And
that
some
makes
of them
it
are
hard.
crap.
Yeah, a lot of the stuff that makes it online during times of low stock, it is usually rubbish. And so on a train line, you know, like literally on it, it's that close sometimes, you know, flood pockets or very bad condition, been on market forever. So it's really a lot of hard work during this time, actually.
Okay. Well, now, as I said beforehand, we were really into the data and the narrative and interpretation of what's happening through COVID. And I don't think things are going to be as bad as what everyone thought. Do you agree?
Agreed.
Yeah. Where do you see the market? Like, I've been having some chats and people are saying that the next housing crisis is not that there's going to be properties everywhere and property going down in value. It's going to be that there's not enough property around for Australians to live in. What do you reckon?
Well, yeah, I think this dwelling deficiency, I've tried to call out in a couple podcasts, back since early 2019, building approvals haven't been keeping pace for a couple of years, but they were coming off completions at very high points. So 15, 16, 17 was huge. And so what now feels like a hey, there's properties and units all over the place. That's coming as a result of, less people coming in to rent out those units. But the trajectory is down from a supply. Now, it won't really show much right now in terms of that deficiency because of the border constraints and rental markets. But if confidence continues to stay low in being able to throw up new blocks of units and other stuff like that, that pent-up demand that eventually opens is when you start to see, okay, well, we don't have many dwellings out at the moment. It's also why many house vacancy rates aren't flying up across the country. You have many markets, I'd say the majority, sit at a pretty healthy vacancy rate right now. And it's, just patches around certain areas, high density areas, near university areas, which just the rental markets aren't too healthy at the moment. So I think that's where the dwelling picture is at the moment from a supply angle.
So Lorna, you're a property investor?
Yes.
What's the backstory working with Arjun here? Because I don't normally have notes in front of me, and I do today. So thanks to my team for the brief. But you don't look very old, but you've got quite a few properties. What's happening there?
Yeah, I guess, I started my property journey.
By the way.
Thank you. Thanks, Phil. So I started my property journey basically when I was 22. So I bought my first 2-bed apartment in Yagoona, just your stock standard, 3 levels, no pool, no high stratas, that sort of thing. And, I'd saved up for so long. I'm so glad I bought it. But I guess, it was, what's it called? It took a while for me to buy that second one. It was just so difficult in terms of like borrowing some more money. And I guess I couldn't spend very much in Sydney. And by the time I saved for maybe 3 or 4 years after that, I was basically priced out of most of Sydney.
Yeah.
So, looking back, like I spent all those years.
So time is a beautiful thing in property, but as long as it's productive time rather than bad time, right? So let's chat about so you bought a 2-bedroom apartment.
Yeah.
Right? How much did you pay?
I paid $367.
Okay. When?
Back in 2014.
So you should have seen some growth. Like you didn't buy it at a bad time there. I know Yagoona. My grandmother used to live in Yagoona, so I know. We're in Yagoona, like a street or area. It's because normally Yagoona's full of like, post-war big block 5-row houses, right? Well, maybe not anymore.
There's quite a few apartments. It's basically a street off the Hume Highway.
Okay.
Yeah, so just a smaller street towards the end of it so that you don't get a lot of traffic noise.
Why did you buy that property?
Basically because, I just knew the area.
Taxi driver told you to?
I just knew the area. There was lots of, I guess, young families, that sort of thing. It was obviously, within my budget as well. And also there were quite a few units around the area, especially in Bankstown for sale. And I guess, just bought near that area.
Yeah. So at that point in time, back in 2014, which is 6 years ago, was the idea just to buy that property? Did you live in it or did you rent it straight out?
I just rented it straight out.
Okay. Cool. And where were you living at the time with my dad?
Still at home.
Okay, cool.
Yeah.
Was the idea just to buy that and that's it? Don't really think about it? Or did you buy that for a purpose? Or what was the purpose of purchasing that property?
So basically, like when I was 17 and 18, my first ever boss that I had, he kind of started buying properties around Sydney. And it was just telling me, I bought this month and then another one a couple of months later. And just kind of like, piqued my interest a little bit. Opened my eyes up and I didn't really understand it, but I just got that feeling that it was a good idea to go into it. And so, basically ever since, I was like, I'd been saving up for so long and I was like, what should I spend this money on,
So when you bought in 2014, 367 grand, what was it? 20% deposit, 10% deposit? Do you remember?
I think, it was definitely 20% deposit.
20%.
Yeah, I didn't have to pay the, what's called?
LMI.
Yeah.
So how did you raise that money? What sort of work were you doing?
Basically, as soon as I could work, I started working. So I'm first generation Chinese Australian. So, we were raised with not very much. My mum was a single mum, so she raised both myself and my sister on welfare, unfortunately.
Around that Yagoona area? Is that where you grew up?
No. So we grew up in Penshurst, so near Hurstville.
Yeah.
So, yeah. And basically, as soon as I could work, found a job when I was 15 at a pharmacy, worked there after school, on weekends, that sort of thing, right throughout high school, uni, and then a little bit after uni. And then, that's how I pretty much saved up.
Okay. What did you do at uni?
So I started in chiropractic science, dropped out of that, and then went into commerce majoring in HR.
Okay. There you go. And today, what sort of job do you have?
So I work in medical recruitment.
Okay. That sort of makes sense.
Yeah.
That's good. Good way to close it. So you're not scared of a bit of hard work?
No.
It sounds like you have pretty good financial discipline as well. So I guess I'll call you a millennial. That's okay. It's about China. It's all right. I'm not going to give you a hard time. You're a millennial as well.
Yeah, pretty much.
Yeah. So most millennials complain about not having any money because they never save it because they spend it on stuff, all the good stuff, right? So, I'm generalizing here. So, you can send your hate mail to editor at smartpropertyinvestment.com. But that's what you hear, right? So, but it's fallacy. That's not the truth because there are millennials out there doing the right thing, and that is saving money. But some millennials will say, well, no one gave me financial education, so therefore I'm not good with money. You obviously sound good with money because you've been able to save to buy your first property at a young age. Like, are you good with money, or how did you get good with money?
Yeah, I would say I'm pretty good with money. I think, growing up, not having a lot, you understand the importance of having that security, I guess. And, pretty much, I knew from day dot, I had to help support my mum, my sister, that sort of thing. I'm the oldest, so, you kind of have that responsibility.
Is that a cultural thing? Or is that just you just went, I'm going to take the mantle and making sure everyone's going to be okay?
I don't know. I mean, I think my mum raised me pretty well. I think she's pretty proud of me. Yeah. I guess in some ways.
Bit of both.
Yeah. I think generally the way you are brought up, I think that really helps, So, yeah.
And what was your strategy for saving enough money at a young age to be able to buy your first investment property? Were you really diligent? Was it like, I'm going to put X amount out of every pay packet, or you just ate plain rice or Maggi noodles and didn't spend any money? Like, how'd you go about doing it?
Yeah, pretty much that, to be honest.
Which is cool. Don't worry, I've done it. I can do like potato 100 ways.
So I think when you're young, you can, make those sacrifices. No one's expecting you to have heaps of money to splash, So when you're young, you can just, eat beans on toast, basically, breakfast, lunch, and dinner.
I still have beans on toast.
So, you're a bit more frugal when you're younger. You got to make those sacrifices in order to, get somewhere when you're older, basically.
So you said something that resonated with me, and that was you bought your first property and then nothing really happened after it, and you fall into what is a pool where most investors fall into, is that they only ever buy one, maybe two properties, and then they stop. And Arjun could probably speak more to this because he's had a lot more experience working with people on it. But the reason why is they normally buy the wrong property first. That does not give them that enablement to be able to project into the second property and then the third, fourth, 10, 20 properties, however many they have. So you bought your first property in 2014. It sounds like it didn't set the world on fire. When did you start going, what's next for me? What do I do about it? So
at the time when I bought Yaguna, I pretty much had enough borrowing capacity to almost buy two. I think buying two would just have been quite a big risk. So I decided to just get the one, see how it went, saved a bit more, and then, take that next step. It took me maybe about another 3 or 4 years before I was able to save, enough to potentially buy a second one. And I just remember going to like the home loan specialist and, doing the pre-approval, and the numbers came back and it was just such a low number. I was, I just couldn't buy anything in Sydney almost. So, she was like to me, what about the regional markets? And for me, like...
Was that a mortgage broker or a bank?
That was a bank.
Okay.
Yeah. So, I was just like, what can I buy, basically? Anyway, she gave me a couple of regional locations and I was just like, great. Looked on realestate.com, definitely within my budget, but it was just way out of my reach in terms of, doing the research, but even just like looking at the property, like I've never, I just thought, how can I even go travel a couple of hours just to view one property, it's going to be pretty difficult. Yeah, exactly. Especially if you're working full time, you want your weekends to yourself.
Yep.
So, I just never really did anything with that. And even though I knew I could buy another one, I just couldn't really do much.
So investing in property then for you, and you started it at a young age. It's never too late to invest in property. Maybe if you're 70, because I can't see a bank giving you a loan. But there's a lot of people in their late 40s, 50s is when you probably see Arjun. A lot of people go, I've got to start thinking about retirement. And I go, 50, you should be thinking about this back when you're 20. So, the benefit of starting early in property is that you get the benefit of multiple market cycles, right? Like, by the time you're thinking about retirement, you may see 3, 4, 5, 6 potentially cycles, probably more, right? Depends what happens, particularly when you get stuff like COVID. Why are you investing in property? What's the end game for you? Like, there's got to be a reason why.
Yeah, I guess for me, I want financial freedom. Pretty much a couple of years after uni, I was just working full time, and I was just like, how can you be doing this for the next 40 odd years? Retirement age is like 65, and you can't be raising a family and working full time, and you'd see parents come in and they just look so tired. They got to do the school run, school holidays, that sort of thing. It's just not really possible. So I really thought, I guess property could get me financial freedom in the long run.
Interesting. We're going to go a quick break. When we come back, I want to understand the journey from this first unit property into what is now a full property portfolio. Back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Arjun Palliwell and Lorna Wang. Now, Lorna, so you said it's time to go property number 2. How much money in the bank did you have when you start thinking about that? Had you saved a whole chunk of cash?
Yeah, I had a bit. I did have a bit in my offset. Yeah, which is good. Definitely did help. And I guess for me, I think, so after the pre-approval I got from the home loan specialist.
So you went, okay, I'm going to buy another property. Yeah. And now it's time. When was that?
That was 2017, 2018.
Okay.
Yeah. So basically, I just, forgot about it. And a year later, I got referred to a mortgage broker.
Okay.
And, I was just, at the time, my salary, my income had increased. And I was like, I might just see how much I can borrow now. So, spoke to this mortgage broker and, the numbers came back and it was great. Like I could definitely buy something.
So he went, here's what you can buy based on your current debt profile and your income and that sort of stuff.
Yeah. I could basically get, a 2-bedroom unit in Sydney. But at the time I was just like, another unit, like it's still quite restricted, I just didn't think that it was really worth it. And I was just speaking to the broker and I was like, I've been saving for so long, I could almost reach my goal, but it's not something that I'm like super happy with.
It's not the goal you wanted.
Yeah, exactly.
So you wanted to invest again in property, but you didn't want another unit.
Yeah,
so he's gone, I can get you this much money and here's your budget. So is that when you connected in with Arjun, was it? Yeah,
so basically I did this massive rant to the mortgage broker and, he brought up Arjun and mentioned that he had helped him and his wife buy a property and that he might be able to help me. It wasn't exactly like, a proper referral, but it was more like, I'm stuck in this situation. I don't know what to do.
Here's the story. So who's the broker?
So it was Will from Mortgage Pros.
Okay.
Yeah. Yeah.
Do I know Will, Arjun? I probably do.
Yeah, you may know Will.
There. Yeah.
I mean, a finance strategist is what I'd call them, not a broker. I think that helps, right? When you think of many steps ahead rather than just, the next one. So that was a big difference as well as part of Lorna's journey that came in and goes, okay, well, let's not just think that, let's also think bigger.
So you hooked in and you guys just started chatting? Was that
2019? I'd say maybe May,
basically
June.
A year,
Yeah, or July, August, I'd say.
Yeah. And how'd that go? You just had a chat and...
Well, I mean, from there, I think to give Lorna some massive credit, she's done an amazing job from a savings perspective. And this is where people sometimes don't stop and they just keep saving and keep saving, keep saving. But Lorna had this realization at that point that, look, this is really good. I've done a good amount here. I want to start exploring. And, from her last Yaguna purchase till then, I think there's about 4 years roughly from the time of purchase till then. And that savings journey was very, very solid. And so from that perspective, I think, what Lorna and I were talking about was, well, this could be used in multiple ways. It doesn't just have to be that 2-bedroom unit. And this is when we were talking about, hey, let's remove some of the blinkers here now. Let me start exploring markets together across the country. And that, I think, for Lorna and I, when we were chatting, was a real big eye-opener, wasn't it?
Yeah. Yeah, basically, he helped me look at other markets, markets that I'd never even thought about, going interstate. It's, especially, I've been in Sydney for 29 years, I lived here my whole life. So, looking at somewhere else, I just had no clue what to do. I didn't know where the good places were, the good suburbs, good schools, that sort of thing.
So what'd you do? Where'd you go?
Well, it started actually off with Adelaide. We went to
Adelaide.
Good old Adelaide.
Yeah, great place.
And interestingly enough, the market had just started to really pick along across the western and south suburbs, the inner within 10 kilometres. And that look on Lorna's face when I shocked her to say, it's within 9 kilometres of the city. It's minutes away from the beach and the airport. And we'll get it for less than 400K. It was what?
And it's a house.
And it's a house, not a unit. And interestingly enough, just to recap that purchase, so this time last year, we purchased it for $395.
Yep.
Next door, just a couple of months later, sold for $420. Pretty much identical land size, similar floor plan, and probably a little worse in condition. So that was a good jump. What helped us is because owner-occupiers were quite, interested in this market. What helped us is it was a tenanted property. So that wiped out a lot of the owners. Clovelly Park is the suburb. And with that suburb, within 10 kilometres of the city. And since then, we just had a bank val come back on it yesterday, actually, at $418,000, which is 5.82% in the first year, 1 year growth during some of the craziest times of our life.
That's not bad. And that's a bank val. So if you put it on the market, you probably get a few more bucks in that, considering there's no stock right now. And if you're going to sell it to an owner-occupier, they probably pay a bit of a premium for that.
Yeah, well, actually, stock levels have halved over the last 1 year. So one measurement we look at is inventory levels. And it's pretty much going, okay, if 10 sales per month are happening and there's 50 listings, well, hypothetically speaking, that would take 5 months to clear all properties based on the sales averages.
Yeah.
So this time last year, there was 5 months of inventory. We would call that a balanced market. And that's dropped down to 2.67, which actually correlates with up to 5% growth in the preceding 6 to 12 months. So that's interesting. The stock levels have dropped so low that demand is very high. And now as a result, rental market's up by 8% during COVID, the last 12 months. Vacancy rates are below 1%. And she's got that property rented out at $390 per week.
Okay, what's that, a yield level?
5.13 on purchase.
On the purchase price.
So positive cash flow by close to 6K.
Yeah. And that's important also when you're measuring your yield. There's a number of ways you can measure yield. You can do it on purchase price. You can do it on the total establishment cost, which would be purchase price plus anything you have to pay, like stamp duty and legals and all that sort of stuff. Or you can do it on current valuation, right? But I imagine if you slice those three ways, the yield would probably still be pretty good.
Yeah, still have a 4 in front or 5 in front on the best case, and that's looking positive.
Yeah. Sorry, what was the suburb again?
Clovelly Park.
Clovelly Park. So you can go and check out the numbers. Just search it on smartpropertyinvestment.com.au. You get the suburb search function there. Have you got any numbers on it now? Tell us about them.
Yeah, so Clovelly Park at the moment, that's where we had that valuation come up at around 420. And since then, now the rent's up 8% is no small number. So that's a big rise in rents as a suburb.
And it's been rented, tenanted the whole time. Did you keep the same ones that were in there when you bought it?
Yeah.
Yeah?
Yeah, so that's the thing, my main worry was, if I bought a property elsewhere that I wasn't going to be able to find tenants. I've heard horror stories where, people buy, I guess, a place and it's just, vacant for so long. So it was basically tenanted the whole time up until March this year. And then it's been, the lease has been renewed.
Okay. It's good. What did you do, a year's lease?
Yeah.
Okay, cool. And how did you feel about that interstate investing? It sounds like you were a bit sort of cautious about. Did you go and look at the property, or did you leave it all up to Arjun? You said you guys go and sort it out.
Yeah, left it up to Arjun. To be honest, I was nervous buying interstate. I don't know the suburbs, don't know what it's like. But I guess I just thought, why not? What do I have to really lose? Especially someone Arjun. He's just super passionate about what he's done. He's obviously been through the journey himself as well.
How important is this for that? Because I was going to ask you how you sort of felt about how Arjun helped you through the process. I know Arjun's story. We spoke back in the day when you were at Commonwealth Bank.
Yeah, just fallen off CBA at that point.
When you could have been a branch manager one day.
I was actually.
You were, weren't you?
Youngest
guy or something like that. So how important was it for you that there's this sort of commonality or continuity of trading off Arjun's own journey through property to make it a more comfortable process for you?
Yeah, I think for me, the numbers that he gave me, but also, his passion, his dedication, that sort of thing, just really, I guess, built my confidence with him and, what he did. So, yeah, that really helped me kind of place that trust.
Yeah, that's cool. We're going to go to another break. We'll be back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show, with the great Arjun Palliwell. He's back in the studio with Lorna Wang. Now, Lorna, chatting about your journey, it sounds like that transition from property 1 to property number 2 was not a bad one. South Australia, good place to invest. And you speak to most good property buyers or researchers, people who've been in the game for a while. Most of them say Adelaide can be a good performer if you buy in Adelaide for a purpose. She's a sort of steady as you go type of place, Adelaide. It's never going to get the peaks and troughs of what you're going to see in Sydney, but by and large, it's been a very steady performer over time, and it can be a great foundational property in Adelaide because of the yields, because of the continuity of investors and all that sort of stuff. So property number 3, when, where, who, what?
Yeah, so basically straight after the one in Adelaide, I was just like, yeah, let's get back on it.
Go again?
Yep.
Okay, you had more money.
Straight away.
You got to go out more.
I do go out now. Yeah. No, I do enjoy myself. But, at the end of the day, my goal is financial freedom. So, eyes on the prize, that sort of thing.
Fair enough.
and with this one as well, I mean, this is where we started to think about land tax and how that came into the picture and, diversification, different markets. And so when we started talking and strategizing about that, there was a little suburb out western Brisbane. And interestingly enough, western Brisbane has been pretty subpar in its performance overall. But that's because it's been full of supply. And so the key is, there's markets within markets, and we found a little gem of a suburb called Eastern Heights. And this suburb last year, we purchased a property earlier this year, right during COVID, I feel as well. It was a couple months into the COVID experience or just during March when things started getting locked up. So that was interesting. But we purchased that for $345, roughly around there. Rents are just over $360 a week. So the yield was 5.4% positive cash flow. But that was actually rented out in a few days. Even during COVID, someone was like, multiple applications all came in straight away. Interestingly enough, of late, it still stayed steady. And over the last 12 months, including a big chunk of it now during the COVID period, that suburb has grown by 4.6% in values. Days on market, down 18%. Discounting, down 21%. Rents are up 6.8%. More sales occurring, volumes up 10%. And on realestate.com.au, we've got it as a high demand market with 749 visits per property in comparison to Queensland average of 616. Pretty owner-occupied driven at 70%, and stock levels have almost halved down to 3 months of inventory with a tight vacancy rate of 1.5.
Lots of numbers, Arjun. Let's look at the narrative behind it. So I go, that's all cool. Why?
Why? Well, the diversification play was one key part. We wanted to keep this whole affordable, right rents with a market that has that growth potential that we're seeing. And that's what really kept this borrowing capacity ticking along too. So strategizing and going, we don't want to go to the 2-bedroom unit. We don't want to just sit aside with 2 properties and fingers crossed it goes up. How do we get that same momentum going?
Good. Interesting. I've never heard of that suburb. I'm trying to work out where it is.
Walking distance in some parts to the actual city centre of Ipswich. So right amongst it all.
So it's near Ipswich, out that way.
Yeah.
Okay. I'm getting my geography right. Okay, I think I know where it is. Cool. So there's one more property in the portfolio. Probably 4 properties?
Yeah. So that's in North Bendigo.
North Bendigo.
Yeah.
Okay. So you're down in regional Victoria?
Yeah.
Bendigo's a good spot.
Yeah, I mean, I purchased a property for myself there just a couple of months ago, so I'm bucking it.
We spoke about that last time you were in.
That's in. So that one in North Bendigo. So North Bendigo is where the big hospital project has gone in, $680 million, finished in multiple stages over tail end of 2018. And with that market, that strategy again was, hey, we're now across 4 states, New South Wales, SA, Queensland, Victoria. We're just spreading the eggs again, playing that affordability and so forth. But what happened here is we had a unique scenario where we purchased this and the one prior off market. And with this property off market, one of the owners living in Perth, fly in, fly out, and just felt that, hey, during this time, it's pretty crazy right now, not working. We interestingly settled on that property today. So congratulations to Lorna on that one.
Excellent. So, there you go. Pop the champagne.
There you go. And with this suburb, it's really started to pick up. Over the last 12 months, growth has been 9.4%. Rents are up 3.2%. Vacancy rate at 1.3%. Inventory is as tight as it can be with 2 months of stock. And 16% reduction in days on market. People selling faster, renting for more, growing. And, when you look at that all, if you see what we've tried to do from a strategy perspective, we've diversified it, stayed with houses, gone into market with the momentum's picking up, and, kept it affordable with the right rent so her borrowing capacity hasn't really been too shaken up.
And how did you leverage yourself into these properties? Where'd you get the cash from? Is it refinancing the other properties?
Yeah, I did do some refinancing.
Yeah.
Still had a bit of savings, that sort of thing, or kept saving, basically.
Yeah.
And basically being able to buy a fourth.
Well, and we said you settled on it today, so that's great news. Is that enough? I sort of joked, pop the champagne, but are you actually celebrating the milestones as you grow your property portfolio, or is this just now part of the process and you're already thinking about property number 5? Like, what next?
Yeah, I guess for me, I'm still thinking about...
You've got to stop and smell the roses sometimes.
Well, she's sick of those cruddy gifts from me when we say, hey, we settled, by the way, here's a little gift.
What sort of gift do you give?
Well, look, I'm a big foodie. Okay. So as you can see as well, I'm actually, but with the sweet treats, I think Lorna's been enjoying some of those sweet treats I like to send out.
Yeah.
Well, I think it's just good to recognise milestones, because if you always rushing to get somewhere, you often forget to actually go, okay, look, I'm on track. You got to assess against the strategy every now and then. If you don't stop and do a debrief, you can miss so much in the way through.
That's true. I mean, I've never been someone to, really, I guess, reflect on what I've done. And sometimes I do look back, I'm like, oh my gosh, how did this happen?
How did I get here?
And I mean, I guess, now speaking with you, I do look back on it and it's just been a pretty good ride, to be honest.
So are you already planning number 5?
We've
been
been having some chats about the coast and Central Coast, but I'm stuck between, hey, Lorna.
Central Coast is going crazy at the moment.
It is. So we've obviously been actively looking into that market and picking up stuff and talking to Lorna about that. We get stuck between, hey, is this the beach house for the live-in or is this the investment? That's the tough part in Central Coast.
You always get it wrong if you do that. You've got to be one or the other. I know every single person that's bought a lifestyle thinking they'll use it every other weekend, never use it. It just ends up costing them money. So you're better off just Airbnb when you want to get away. But no, we'd sort of joke a little bit. But so it sounds like it's a good journey. And my observation, and I'm just a guy who talks on a podcast, but you seem to have done a lot of things right. But investing in property isn't hard if you just do the basic things really well. And that is know your financial position, save money, keep more than what you spend, don't go into debt, don't have credit cards, don't buy fancy cars that you don't need, live within your means. All the basic stuff we're all told since kids to do, you just seem that you've organically just done that. So that's pretty cool. But I think also, and one of the reasons why I'd like to think I've done well in property is that I've always surrounded myself with people that know more about it than me. And you know what? That's accessible to everyone. You don't need to be running a podcast to actually, have the advantage of being able to speak to anyone in Australia. You can pay for good advice, and it certainly pays off in droves. And it sounds like, your mortgage broker, that you don't pay them, they get paid by the banks. But, investing in a buyer's agent's been a good journey from you. Do you think you would have got as far as what you have done if you didn't have that sort of that team around you?
No, definitely I wouldn't have. To be honest, I think I still wouldn't have bought my second one. I would have been too fearful about, what's happening with COVID, where do I buy? Sydney, you always hear about Sydney, going for a downturn. So, I mean, I was basically joking with my friend the other day. I was like, I almost think buying property is easier than buying a dress.
Yeah, well, at least you got somewhere to, you do something with your property. You can't wear your ball gowns anymore anyway, right? But what does your peer group think about what you're doing? Or are they doing the same? Or have you found yourself an adjacent peer group who are connecting with property, or they think you're mad?
I think they think I'm mad.
Do they go, how do you do it? It's impossible. I can't save 10 grand,
Yeah, I mean, I don't know. I don't think I know anyone who has, that many. But, I guess that's just the circle I run in,
Yeah. That's cool.
Yeah.
It's all right. So, hindsight's a beautiful thing. If you had your time again, what would you do different? Not that your journey is by no means ended, but going back to this sort of debriefing and reflecting, what are you most proud of and what do you think you really could have got done better?
Oh, I don't think I did too many bad things. I think with Yaguna, it's always, I think most of the time I've held it, it's been positive cash flow. Okay. So pretty lucky with that. Most people's first property, especially if they buy in Sydney, it's always negative. And I guess, that's just the way it is. Yeah.
Okay, cool. Nice one. So, Arjun?
Yeah, as you can probably tell, Lorna doesn't give herself enough credit. She's a
very humble investor, which is the best investors I know.
100%. And, right now, we were just not long ago running through cash flows and on the current interest onlys and numbers, she's sitting at over 23K in passive income. And to be,
it's actually putting money in your back pocket.
Yeah, and that's
before
really
tax. I wish my portfolio did that.
Well, look, that's such a testament to the behavior she set herself. Working together on the properties, the strategy, her finance broker and finance strategy, that's all great, but it starts with the person's financial behaviors. And you said it best, Phil, when you start to get those behaviors right, all of this stuff, it just steamrolls. It just picks up momentum.
Out.
That's it.
Yeah. Nice one. Well, thanks for coming in, guys, for a chat. Really enjoyed that. Let's do it again soon, Arjun.
Done.
Yeah.
Nice to meet you,
When you do
Phil.
your next one, you too. Good one. I hope you enjoyed that, everyone. Remember, check out smartpropertyinvestment.com.au if you're not yet subscribing to our daily morning newsletter, so you're the first to know what's going on in property. smartpropertyinvestment.com.au/subscribe. Social media, you can find us, Smart Property HQ. That's how you get your info. That's where sort of millennials get most of their info, through social media. So if that works for you, it's cool. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.